I'm going to give you an update on the bots. My last video was just talking about 3commas, doing some experimentation, and I've found that these trading view signals as a hook for your bot are terrible. Don't use them. Basically, I was using a combination of maybe 15-minute, 1 hour, and 1 day signal for buy. And I thought I was being conservative because I figured, well, if it's a buy on all time frames, then it's good, right? No, it's not. So if you do a 15, a 1 hour, and a 1 day, that means it's going to be a buy signal of, it has to meet all of the criteria. It has to be a buy on the 15 and the 1 hour and the 1 day. And as you can see, it's a mix of all these. And, you know, this is more for scalps. This is for more for longer term scalps, and then 1 day and so forth. But just because it has all these signals telling you to buy or sell on one at the same time doesn't mean it's a good time to buy. And this, for example, Filecoin, it basically got the signal at the top back here. It was on September 5th. I think it was September 5th for Filecoin, was it? Yep. So it's not Bitcoin QFL. Just ignore that. It was a trading. I think I was using trading view signals. And see, the reason is when you're up at the top here, all those buy signals, all those signals are going buy, buy, buy. So you're going to buy a top, and this thing's going to come down, and you're not going to be able to get out. Even though I had a tolerance of like 60% deviation, yeah, it's buying down at a 60% deviation, right? All the way down to here. But then it went lower. So, and just because it can tolerate all those deviations down, I mean, 84% down doesn't mean that you're going to be able to get out of it. And I will demonstrate spreadsheet I made. This right here, I made this with formulas, and it's duplicating the 3commas table preview when you're programming your bots. And there's a little thing in the upper right that's previewing the various stats. Like here, I'll just show you just in case you didn't see my prior videos. QFL multiple. So these were not I don't think these were QFL when I set this up. I think these were trading view when I initially set it up. But regardless, here's the table that I'm talking about right here. I just didn't like to have to plug in these things and then click over to table to see how it affected it. So I made a spreadsheet, and if you join our Discord, you can get this table for free. I posted it, or if I haven't already, I will post it. So basically, when you enter all the criteria, that's the same criteria as in TradingView. It will show you in real time what it does. So let's say I do 8 safety trades and target profit 3%. All these numbers are going to change. So let's say we bought at the top here, and I thought that I had programmed my safety trades to tolerate this deviation of 60% and hoped it would get out. Why didn't it get out here when it pumped back up? It went down by 50%, and then it went up by 42%, but yet it didn't get out. It didn't get out in profit. So the price here at this bottom was 55 bucks. The price here was 114-ish, 113. So my safety orders tolerated probably a little bit more than this, like a 55% drawdown. And my average price was, I'm sorry, here, let's plug in this hypothetical price. Starting price of like 113. See, does this do it properly? Okay, so when it goes all the way down, my average price overall is 48 bucks. And the required price to get out is 50 bucks. So the actual required price change to get out is 153%. It's not $50 to get out. Because the current price in this scenario, in this hypothetical scenario, where it's deviating down, the current price where it's deviating down by 64%. Sorry, it took me a second to get that. Okay, so average price, the actual price is 40 bucks when it draws down enough, or even if it's 55. But my average price is 67. So in order to get out in profit, it's got to be 74% up from the current price. So my average price is this. The required price is 69, but the current price is 40. So we drew down to 50 bucks here, and my price to get out was 69. In this case, it would have worked. It would have gotten out, but for one reason or another, my numbers were a little bit different here when I set that bot up, but it has to do this kind of thing. It's got to do really big upside. And in this case, it's like, it's got to go up to 79 bucks to get out. Let's see, it drew down to $55. I was at, let me try to duplicate this. Now, you know what? It's going to take too much stream for me to try to duplicate it, but basically what happened with my bot is that it couldn't get out. Even though it tolerated this, the upside was a little bit too high. So it couldn't get back up there. So that's the risk you run with these bad signals. You do not want your bot ever buying at these tops. And those trading view signals will cause that. And then it just kept going down. So I cashed out. I got impatient. I cashed out in November because I was right here. Bought at the top, went down as much as it could, but it couldn't actually go down even more because I ran out of money or because it filled all the safety orders. And then by November, I was looking at it and I was like, it missed this pump. It wasn't able to cash out on this pump and it's still drawing down. I'm never going to get out of this, and my liquidity is locked up into something that's never coming back, or may never come back. I didn't think it would, because we already had a kind of a double top, like a peak here and a peak there, or a peak here and a peak there. And the same thing was with OMG. Had the same problem. It bought at a top, or it bought too high, and it wasn't able to get out, and I cashed it out. So in this case, it started it in November 11th, and then I gave up on November 30th. So let's look at OMG. Oops. So November 11th. Yeah. It bought at a frickin' top right there. Right here at this. Like it bought somewhere here. And then it just went down and it never came back. So I thought I was being, smart. Like, oh, I can tolerate a 60% deviation down, right? There's your 60%. Your average price is 17. Well, in this case, if you want me to show you again, just to get it, So tolerates a deviation down to 64%. And my average price is $10. The current price is $6. It's required to go to $10.50 in order to get me out of it profit, but that's a required price change of 74% from the current price. So if the price is currently $6, when you're on a downward trend like this, how are you gonna, you're gonna need like a lot of luck for it to get back out from $6 to required price of 10.50. So yeah, I'm around here and it's got to go up by like 60%. So even though I can tolerate a 60% drawdown and still keep buying, it's going to require 61% pump or increase from that. And that's only going to happen maybe in a bull market, and we're in a bear market right now with this coin. Like there's a lot of different coins, a lot of different things. Some stuff ignores it. Like KCS is a great coin. Like this might have been a great coin to plug into these, because this thing recovered even on, when Bitcoin dumped, this thing shot back up. So this KCS, KuCoin, actually did a lot better than everything else. It went down 45% and then it went up by 40%. So you're looking good. And plus, I'd feel more comfortable holding KCS at a loss than I would OMG and Filecoin, because there's so many other projects coming out with a lot of potential that OMG and Filecoin, it's like they could be done for a long time. And do you want to be holding them in a 60% loss or 40% loss while you wait for it to recover like 2 years down the line or 1 year down the line or who knows when you've got all these other coins that are pumping like mad? You could actually 2x your money or do some crazy gains in some random thing. Not random, I shouldn't say that. You've got to know what you're doing and know what you're getting into. These projects, like, they can come off like they're great projects, but they might not be. Like, I mean, somebody pitched this Epic Coin thing to me, and this thing was at $6, and they were saying, "Oh, why should I buy any of those other coins when Epic Cash has got a great community, great this, great that. They've outperformed the market, yada yada. Most coins in the market they outperformed." Well, it's like, yeah. Well, every pump and dump coin does that. Every pump and dump coin outperforms the market and then dumps, because the people who are late to the game, the people who are coming in over here, are basically pumping these guys' bags who were in early. So then when maximum hype critical mass gets in and everybody's basically bought who's going to, well, then it starts dumping because you can't get any more people into it than that. And people, if they're smart and they see this thing taking a crash of 10% or 20%, or, well, I mean, crypto's different. So maybe 25% crash, it's probably time to get out. Like, and I can't get this to show up on TradingView, I don't think. So yeah, it's not, this isn't a coin that's on TradingView. Yeah, Epic. Yeah, it doesn't show up. Yeah, not there. So yeah, how great is the community? What, I mean, when they say great community, what does that even mean? Because that could just be a bunch of people who are all hyping this coin and saying diamond hands, well, you're losing your ass. 75, 80% down. Oh, diamond hands. Don't be paper hands. Yeah, lose all your fucking money. Yeah, and the same thing with Hex. I mean, I like the guy. I like Michael Hartwin. I like the way he talks. Really smart guy. But I got in here. I got in up here. And I wanted to get in here down here, but people were talking me out of it, saying it was a scam. And then it just kept going up and up and up. And I was struggling trying to get in without paying maximum gas fees. And I finally got in, and this thing just fucking tanked. Because it had reached the maximum hype, like the critical mass, where it's like there's not going to be any more people getting into it that aren't already into it. They got their advertising campaign. They got it all over the place. Everybody's getting in thinking they're going to be rich. But no, only the people who were in early back here are getting rich, because they're getting rich off all the latecomers. The latecomers come in. Maybe if they're lucky, they got in here, or they heard of it here, which is when I heard of it. People were trying to talk me out of it while it was going up, and I was like, great, I missed out. I listened to all these other people, and now I lost out because I listened to them and didn't get in. But really, it only did a 3x or 4x, and you would have had to get out. But the thing is, you could only buy this thing on wallets, and you're paying $200, $300 in gas fees. So unless you're buying a ton of it, there's no upside here. And if you're buying a ton of it, why would you commit a ton of your money towards something that's in its all-time highs? All-time highs, as it goes higher and higher, it gets more and more risky. So it goes to its all-time highs, crashes, comes up, and there's no stop losses. There's no quick, automatic get out, with your wallets. You can pay a ton of gas fees to get out of it. You're just like getting screwed twice. So I'm not saying wallets are a bad place to store your money, but beware of these gas fees will eat up your profits if you're not rich already. There's no stop losses. So it's just some food for thought for you guys. I don't want you guys to get screwed. I've lost money, but I've gained money. I've overall come out at a loss, but it's fine. I knew what I was doing. I was gambling. I wanted to play. I wanted to see how it was really going to pan out, and I learned from it. So your best bet is to have to buy here. Buy at these big crashes. So let's say you use this CME EMA trend bars. By the way, I edit the script here to take out this bar color thing. You put 2 forward slashes in it. And basically, I can't edit it. I have to make a copy of it to edit it. So I'll just take out my copy. Because in its current state, it causes all the bars above the green to be above the green signal EMA. It causes all the bars to be green when they're above it, even though the candles are still outlined by the red, showing the fact that it's a sell candle. I just don't see this as necessary. So your CM EMA by Chris Moody, I made a copy. I think it's a pretty good indicator. So far, so good. All right, there we go. And Pine editor, right here is where you put your bar color. Still not letting me edit it now. There we go. There's my copy. There's the 2 forward slashes that makes it so the bar color doesn't change like that. So with these bots, perhaps this is a better signal than the TradingView signals, because you buy here, it tells you to sell here, but you could have your sell target just to, be 3% or 5% or whatever. Buy here, and then it tells you to sell a little bit late. Buy here, but really sell here, Don't wait for it to go down. Don't wait for the sell signal, because you lose all the profits that you could have gained. So really a good idea is to look at coins and wait for things that deviate down from this by like 11, 12, 13, 14%. And then start DCAing in. By DCA, I mean dollar cost average, which means if you have 1,000 and you're like, I want to get in, I think it's a good price, it's really low right now. It's already down from the candle by 14%. I'm going to buy some, so just buy 200 worth. And then if it goes down more, buy another 200 worth. And then as it goes up, then you could start DCAing out, or you can hold it and try to get the maximum profit. And this is mega bull, so we're probably not going to get these again, but this is more realistic. Like this gain of 9% above that candle, above that EMA. But from the bottom, it's 37%. Great gain. And at this point, since we're in bear, when you're buying these crap coins, you either need to know the project. You really need to know the project, because Epic Cash, for example, they had a lot of literature and charts and diagrams and all that crap, But when it came down to it, the coin had nothing, like no use case. Like, who's going to use this? Why? They're just buying it in hopes of selling it for higher. So if it's just one of those coins, then forget it. But if it actually has something behind it, then it's something that can survive in the bear market. Um, like, let's say, Curetto. I mean, this is like a long-term hold. It's one of the better projects. It's on a support level, and when it typically hits these support levels, it bounces up. So, this is what bots can't perceive for you. Like, you want to draw these price zones. It's like, okay, here's a price zone that it typically is a resistance or a support. Here's another price zone that is looking like it's support. And look, it was like support back here too. Well, not exactly. Kind of close. But anyway, it's getting near kind of a support level. And can it break down? Yes, absolutely it can break down. I thought that this was a great buy at 350. I bought it at 350, I didn't go all in at 350. I'm not dumb. Or ignorant, basically. But I bought some and it just continued to go down, and now it's at 235. And so have coins that are really solid, and watch those ones. And maybe if you're going to do your bots, plug those into your bots. Solid, absolutely solid projects. Not Filecoin, not OMG. Because look what happened, Unless you're willing to be at a loss for like a year, to be holding a coin at a loss for like a year. And that's absurd when it comes to crypto, because the gains are so fast. The gains and the dumps are so fast and unpredictable that you want to have your liquidity free when we're in downward trends or going sideways and down or whatever. You want to have your money in the market when we're doing these pumps. So, hey, in this case, on Atom, I'd wait for the green signal. Or DCAN, because it's often what times what I see is they form a downward trend, and then they'll break out of that trend. They will break that trend, just like here it had an upward trend, and then it broke the upward trend after a certain point in time, right? Here it was on a downward trend, and then at a certain point it broke the downward trend. In this case, it was kind of a fake out where it's like you think it's breaking the downward trend, I'm going to buy, but then you don't have confirmation or whatever, and then it just dumps. So you just lost. So DCA, just like put $100 or $200, it's like, okay, I want to get in, I want to get the profits, but it's a risky move. So it kept going down, and then it broke the trend unpredictably, and then it went up, retested, and then went up again. So it's like you had confirmation there, but at the same time, you still could have. Where's the drawing tool? Even if you had confirmation here of it breaking, of it testing and then going back up, this could have gone down this way. It could have just dumped here. You have to be ready for that. So that's a possibility. So you kind of got to babysit the stuff. I mean, this is on the daily, so the longer the time frame, the more reliable, the more. I mean, here you have an upward trend basically on the on the weekly, but it's breaking under the upward trend. It just broke. Upward trend. And then if you're really doing TA or whatever, you could say, oh, we got an upward wedge or something like that. So just beware. This is kind of the things that bots can't tell you or can't read, at least the bots as far as I know. I mean, I don't know how to program in to kind of see the art in this. Like, it's kind of an art in terms of reading this and knowing when to get in. And there are people that are much more advanced than I at reading this and knowing when to get in. But you also got your other indicators. One thing you could do with your bots, which is probably a safer strategy, is to do RSI method, where if it's crossing upward on the 34 RSI, then buy. Not crossing downward, because that's just the beginning of the downward movement, but crossing back upward. So you can add an alert on the RSI, and this can be your webhook into 3commas, and then you can have it so it's crossing up over the 35, say, RSI, as just an example. So when it or let's say you want to kind of be in it more often than that, because if you're just waiting for 35, if it rarely crosses the 35 like Adam does, then you're not going to be able to trade as much. But so crossing upward on the 34 RSI would have got you in here, somewhere here, and you would have made profit. But then you would have had to wait for a long time before it bought again. So then you have a bunch of coins that are very good, and then just study the RSI on each one, crossing upward on the RSI. Buy here. Great buy. Great buy here as well. But you had a lot of volatility, sideways, down, back up, and then you would have taken your profits here, but then you would have been good if you could have got back in down here. So you kind of got to figure it out. So maybe 37 RSI is your better bet. You can have a lot of more intersects. And then safer coins to be in might be good, like BNB. And look at the RSI action. And so RSI is a lot better indicator. I don't know how QFL really works. I was trying to capitalize on that, and I was looking for videos on people making how this QFL thing works. It really didn't seem clear. I watched some videos. Supposedly you're buying when it bounces down. When it bounces down, you buy, and then it retraces, because whenever there's a big bounce down, it'll retrace back up. So that's something I was experimenting with, but not for long. So here's the Discord that I'm in. It's Crypto After Hours. I can put an invite link in the video description, and I will post that spreadsheet in the Discord if anybody decides they want to use it. So any comments or questions or ideas, let me know. Do not just blindly follow all these people who make these 3commas videos, because there's a lot that they're not saying. I noticed, it's just like, that's kind of really disappointing about them, is that there's a lot that they're not telling you. It's like they're just getting you into it. They're getting you excited about it. So you watch more of their videos and you're like, yes, let's do this. I'm going to make some money with the bots. I don't even have to watch the charts, yada, yada. And then you get wrecked. And that's just that's not cool. That's not cool. I think people need to disclose what can go wrong. How these things can go wrong. That's what I'm not seeing a lot of. Or I'm not seeing enough of. Maybe they just don't have a high enough view count to get enough viewers or subscribers or whatever. But this is the reality of this. So yeah. And stop losses, by the way, they wick you out on those stop losses. All these wicks are hitting people's stop losses because they know if they see your stop losses on the order book, they're going to take it, because they love to take it cheap and then sell it for a higher price. I mean, God, did somebody really lost their Binance coin because they had a stop loss, or they sold it by accident at 214, 215? and then it goes back up to 600s. Good God. I mean, I hope that wasn't somebody, you know. Yeah. So, okay. Anyway, this is kind of the negative side of it, but I think you need to see it. So, yeah. See you in the next video. I'm not making these videos that often because I just don't. I'm not sure if I want to be like a YouTube personality or making videos constantly. We'll see. I don't know. Making this for your sake, so you don't. I got wrecked so that you don't have to, and I learned the hard way so that you don't have to. All right. Good luck.